Yeah, good morning. Yes, we are welcome to today's class. Then in our last class, we started with value-added tasks, which is what we are still going to continue. So where I told us that value-added task is a task on consumption. It's a form of indirect task that is what charge on what goods and services at various stages of what from production to distribution of the goods and services. And we also talk about various aspects relating to what the value-added task. So today we are going to start with a method of calculating VAT liability. How do we calculate what? The VAT. So what are the methods of calculating? So basically, there are three methods of calculating value-added tasks according to the tax law. So these three methods, so we have three methods of calculating the value-added tasks. So we have the invoice credit method, we have the subtraction method, then we also have the addition method. So those are the three methods of calculating what value-added tasks. So we have invoice credit method, subtraction method, and the addition method. Of these three methods, one of them is the one that is adopted, that is utilized in Nigeria. But notwithstanding, you are also expected to know the other two methods, how it is being adopted or calculated. So under the VAT liability, as I said, one of the methods is the first one is invoice credit method. It is called invoice credit method, or you can see it somewhere where they say the invoice method or the credit method. So it can either be called that. So under this method, this involves a process of of looking at the sales by calculating what is called output VAT, and also calculating the input VAT. This invoice credit method involves a process whereby VAT will be calculated whenever invoice is being raised. Whenever an invoice is being raised, value-added tax will be calculated. And when you are calculating the value-added tax, you are going to look at your input VAT and your output VAT. Don't forget, I told us that whenever our output VAT is more than our input VAT, the difference is what is to be remitted to the relevant tax authority, which is the amount of VAT payable. So that indicates that under the invoice credit method, it is expected that you must get the value of your input VAT and also get the value of your output VAT whenever there is sales, whenever an invoice is being raised. So when you now get your input VAT and your output VAT, so the difference between your output VAT minus your input VAT will now give you the amount of VAT payable to the relevant tax authority, which is FIRA. In other words, where the input VAT is more than the output VAT, that will give you the VAT credit or the VAT to be refunded by the relevant tax authority, which can be collected in different form. So basically, the invoice credit method is when a trader sells his good, he charges VAT at the stipulated rate and issue an invoice to the purchaser, which shows among other the VAT charge. So whenever there is sales of the product, you must account for invoice. So when you are accounting for the VAT you are accounting for as a result of the sales that you made is what is called output VAT. So when you now account for the output, you also look at the VAT that you suffered when you are purchasing that item. Because that item you want to sell did not fall from heaven. That item will also be will also be bought or acquired for somewhere. When you are acquiring it, the seller will have also charged you. So the VAT that you suffered on during the process of purchasing that item is the input VAT, which should be compared with output VAT to know the difference to be payable to the relevant tax authority, or amount to be refunded. This method is the most widely adopted method by what? By different countries. And it is the method that we adopt in Nigeria. So this is the method. Invoice credit method is the method that we use in Nigeria, which involves use calculating your output VAT and also calculating the input VAT. So this is what we implement in Nigeria as far as the first method is concerned. Then we also have the subtraction method. So under the subtraction method, this does not involve the process of calculating output VAT and input VAT. So this involves you getting the amount of the value added. How much is the amount of the value added? How do you do that? By looking at the total sales minus the total purchases. So your sales minus purchases will give you the value added. So under this process, you are not looking at whether input VAT or output VAT. You are looking at the entire sales. You look at the total sales made by the agent minus the total purchase in which VAT has been paid on those purchases. You look at that. The difference between the sales and the purchases will give you value added. So this value added is what you are now going to apply the value added tax rate on. So you apply the VAT rate, which is at 7.5% to get the value added tax. So this method is not adopted in Nigeria, but under normal circumstances and under the same scenario, when you have the same question, when you adopt the invoice credit method and this subtraction method, the answer will give you the same amount of value added tax under the same scenario, where you have the same question and the same scenario. The answer you are going to arrive at for value added tax when you are using the invoice credit method and when you are using the subtraction method will give you the same answer. Then the last one we have is addition method. Addition. So this one involves addition. We are adding. So this involves addition of all the rewards generated by by the all factors of production. Addition of reward generated by all factors of production. So when you now add up all the reward that is being generated by all factors of production, so the addition of all the reward will be regarded as value added. So that value added, they now apply the tax rate on the value added to arrive at at the value added tax. And the various factors of production are land. So the reward for land is what? Is rent. Then we have labor. So another factor of production is labor. The reward for labor is what? Is wages and salary. Then we also have another factors of production to be what? So capital. The reward for capital is what? Rent, interest. Then we also have the last factors of production to be what? Entrepreneur. The reward for entrepreneur is what? Either to make profit or to collect to get income. So all this by providing goods, services. All these four factors of production, the reward that you are going to get from all these factors of production will be added together to what? To arrive at the value added tax, which the VAT rate will be applied on to get the value added tax. Note that these two methods, subtraction and addition method, are not implemented or adopted in Nigeria. It is only when examiner specifically ask you to use this method that you are going to use them. But if an examiner gives you a question, he asks you to calculate value added tax, please, you are expected to make use of the invoice credit method, because that is the method that we adopt or utilize in Nigeria. So those are the three methods of calculating value added tax. Then, so when you now want to calculate this value added tax, whatever the method you want to use, there are certain rules that you need to apply in relation to what? In relation to expenditure. In relation to what? In determining your input VAT. Expenditure will give rise to input VAT. In determining your input VAT, there are certain rules that need to be adopted. So it is not all VAT, or it is not all the VAT that you paid on your purchases that will be deducted from your household VAT. Certain value-added tasks are not deducted from what? From household VAT. So we need to know which of the expenditure we qualify for what? For input VAT. Under the law, basically, there are two categories of expenditure. We have what is called the revenue expenditure and the capital expenditure. We have revenue expenditure and capital expenditure. Revenue expenditure, these are the expenditure that are what? That are recurrent, that expenditure that are needed for what? For the day-to-day running of the what? Of the organization. For the day-to-day running of the business. They call it what? Revenue expenditure. They are what? Recurring expenditure. Expenditure that are needed for the day-to-day running of what? Of the business. It is called what? Revenue expenditure. Then we also have capital expenditure. So these are the expenditure that are incurred on what? On non-current assets. Expenditure that you are going to incur on assets that are going to last for what? For more than a year, for a long time period. Expenditure on your non-current asset, on your fixed asset. So which you are going to capitalize and you are going to claim capital allowance on them are called what? Capital expenditure. So when you are calculating your value-added tax, it is not all the VAT that you paid on all this expenditure that will form part of your input VAT. In the case of capital expenditure, let me start with that. Please, in the case of capital expenditure, any value-added tax suffered on what? On capital expenditure will not be part of our input VAT that will be deducted from output VAT. Any VAT suffered on capital expenditure will be added as part of the cost of the asset, which will be available for what? For capital allowance claim. Because you are going to claim capital allowance, the law allows you to add it, any VAT you suffered on what? On a non-current asset. You are going to add it as part of what? The cost of that asset. And what you are going to claim capital allowance. So because you are going to claim capital allowance, you cannot be allowed again to claim it as what? As input VAT. It's going to become a double. So whenever you see any capital expenditure, so the VAT suffered on capital expenditure is not going to form part of our input VAT. VAT on that will be added as what? As part of what? The cost of the expenditure that will be available for what? For capital allowance claim. Then what in the case of what? Revenue expenditure. Revenue expenditure are what? Are grouped into two forms. For our revenue expenditure, we are going to group them into two forms. For the two major forms, we have what? Direct revenue expenditure and indirect revenue expenditure. Revenue expenditure can either be direct or indirect revenue expenditure. So these are two types of revenue expenditure that are available. Please, for the purpose of computation of value-added tax, only direct revenue expenditure. Take note, only direct revenue expenditure will be part of our from output VAT. Take note, only direct revenue expenditure will be part of what? Input VAT that will be deducted from output VAT. VAT on indirect revenue expenditure will not form part of what? Our input VAT. VAT on indirect revenue expenditure will be added as part of what? The cost of the expenditure that will be taken to what? To profit or loss, which will be what? Which will be allowed as an allowable expense. So because you are going to allow your VAT on what? On indirect revenue expenditure as an allowable expense, you cannot claim it again as VAT on what? As what? Input VAT. So only what? VAT on what? On direct revenue expenditure. And determination of either an expenditure, a revenue expenditure is direct or indirect, depend on what? On the nature of business carried out. On the nature of business carried out by what? By the taxpayer. a particular expenditure can be direct to one taxpayer, and that same expenditure can be indirect to another taxpayer. Let's say, for instance, let's use a good example. Let's say we have a business that is engaged in what? Hotel and what? And accommodation, hospitality, hotel and accommodation. This business that is engaged in hotel and accommodation, they are going to incur certain expenditure. Part of this expenditure are what? Revenue and capital expenditure. We already know that the capital expenditure, you add it as part of the cost of the asset. Why the revenue expenditure? You need to know which is direct and what? Indirect. Part of because this is what? This business I want to give is an hotel. They are going to what? They are going to buy drink. They are going to be selling drink that is going to form part of their normal sale. They are going to buy drinks. They are going to what? Buy food item that they are going to convert to what? To food that they are going to sell to their customer. They are also going to pay for other services that, let's say they engage the service of an auditor. They are going to pay audit fee. They are going to pay what? Professional fees. Let's look at these 4 examples now. This expenditure, buying drinks that they want to sell, and buying food item that they want to convert to food that they are going to sell. These are direct revenue expenditure. Without the drink, the business will not make any sales. So that means that drink is their what? Is their normal source of what? Source of business. Or the food they want to sell to the customer is their normal source of business. That makes it to be what? Direct revenue expenditure, because they are going to be buying drinks on a normal basis, because that is what they sell. So because that is what any VAT they suffered on those direct revenue expenditure on that or drink and food item will be what? Will form part of what? Input VAT. They are also going to engage with the service of an auditor. They will pay audit fee. That particular business, they may decide not to engage with the service of an auditor. Engaging the service of an auditor is not their line of business. So they just that auditor is indirect. It's an indirect revenue expenditure. Because it is indirect, so that means what? Any VAT suffered on it is not going to form part of our input VAT. So you can have an expenditure that will be direct to a business. That same expenditure will be direct will be indirect to another business. So the determination of direct and indirect revenue expenditure depend on on the nature of the services or of the product engaged by the business. So in simple terms, basically, only VAT suffered on on direct revenue expenditure will form part of will form part of our input VAT. Other VAT on other expenditure will either be capitalized or will be taken to profit or loss, depending on the nature of the business. Also, we also have imported goods and services. So when goods are being imported, I mentioned this in our last slide, that when you import an item, part of what you are going to pay as the cost of that importation is what? Is VAT. You are also going to pay VAT. Value-added tax will also be accounted for on that item that is being imported. In that case, so you also pay. Value-added tax is also subject to It's also applicable to imported goods and services. Then you may also be given a situation whereby you have inventory. Inventory are stock, when you have opening and closing inventory. So when your inventory, when you're purchasing, when you are giving inventory as part of As part of the question, your purchases, your direct expenditure, your direct purchases must also be adjusted with the level of inventory. How do you adjust it? By adding you add the opening inventory and less the closing inventory. Why are we adding the opening inventory? It is assumed that the opening inventory will be part of the item you are going to sell in that period, will be part of your sale. Why closing inventory and part of item that you are going to transfer to next period. It's not part of your what? It's not part of your item that you are going to sell because it will be transferred to next period. So when you have inventory, when you are giving inventory in any question, it is expected that the inventory must be what? Adjusted against your purchases, against your direct costs before what? Before you calculate the VAT. Then how do you adjust it? You are going to add what? Opening inventory and less what? Closing inventory. During the process of calculating VAT, you may also be what? Giving information about what? Discount or other item or sales. So how do we go about that? You may be told that where a discount is offered for prompt payment, VAT is chargeable on what? On the net amount, regardless of whether the discount is taken or not. So when you are saying somebody is selling an item to you for 100 naira, but that person now say, if you are going to pay me, instead of you to pay in 2 months' time, if you are going to pay me, let's say in 2 weeks' time, instead of you paying 100 naira, you should pay 90 naira. When you are calculating the VAT will be calculated on what? On the net amount, which is what? The 90 naira, and not what? And not the 100 naira, because the seller did not collect what? The 100 naira. Then also supply made on contingent discount terms. For example, depending on what specific level of purchases in a period must be invoiced with VAT based on what? The full amount. And an adjustment may be made when the discount is earned. So that is what you have. What you are going to supply. Your supply will be made on what? On contingent discount time. That's depending on what specified level of purchases in a period. That is when you purchase. You have been told that okay, this is our item is what we are selling this item for 100 naira. But if you are going to purchase 500, if you are going to purchase one item is sold at 100 naira. If you are going to purchase up to 500 of that goods, we are going to sell that item to you for what? 450 naira. So because what that says is made on what? Contingent terms. So when you are calculating the VAT, if that person is able to purchase up to that what? Up to that level of what? The VAT will also be based on what? On the what? On the discounted price and not on the what? On the normal price. Then goods supplied under a hire purchase agreement are chargeable on what? On the cash price at the start of the contract. Under the hire purchase, we also talk about that when we did what? When we did capital allowance. So under the hire purchase, we have what? The hire purchase price and the cash price. So the hire purchase interest, we know what? Is an allowable expenses that will be what, taken to your profit or loss. So when you are calculating what? The value added time. The value added time will also be calculated on what? On the cash price. That is what? The cost of what? Of the item at the market. Then where a trader charges different prices to customer paying cash and those paying by other means. VAT due in respect of each standard rate scale is full amount paid by the customer times what? The VAT rate. So where you are charging different amount to customer, those that are going to buy on credit, their own is what? Higher than what? Those that will buy on cash. So when you are calculating VAT must also be calculated on what? On what? On how much each customer is paying for what? For the goods and services. Then when goods are permanently taken from a business for non-business purpose, tax must be accounted for on their cost. So an item that you have purchased that for the purpose of the business, you are now taking it for your personal usage. So when you are taking it, you must also account for the VAT on what? On that item. So accounting for the VAT, when you are accounting for the VAT, you must what? So the VAT will be accounted for on the cost of what? On the cost of the item. Because you are not selling it, but you are taking it for your own usage. Because you will have suffered VAT, which will have been subjected to what? Input VAT. So when you want to account for it, when you want to take that item, you must also account for the VAT on the cost of the item. So that you don't cheat government. Government also did not also cheat you. Where services bought for business purposes are used for non-business purposes without charging, then tax must be accounted for on their cost. But the tax to be accounted for is not allowed to exceed the input VAT deducted on the purchases of the services. Also, where you are taking services that is supposed to be for the purpose of the business, you are taking it for what? For personal usage. You must also account for what? For the tax on what? On that services. So hello, sir. Hello. Hello. Sorry for that. I think I have network. Can we hear me?
Yes, sir.
Hello. Yeah, okay. Sorry about that.
We can hear you, sir.
Okay. Yes, as I was saying, I said, so when you are also services that you are supposed to use for the purpose of the business, when you also take it for your own personal usage, you must also account for VAT on those services. And the law is that the VAT you are going to account for must not be less than to not exceed the input VAT, so that you don't cheat government. Government also does not cheat you as a result of that. So those are the rule for calculating value added tax. So this rule is the brain behind the computation of value added tax. You may be given a lot of questions, a very voluminous question that the item that you are going to need there may not be more than 2 or 3. You may be giving information about relating to 20 items. The item that will be relevant here may not be more than either only 2 or 3. So let us take note of that. So that is what in the case of the value added tax. Then we also have a VAT return and remittance. So we have also mentioned this earlier. I told us that the difference between your input VAT and your output VAT, so which is the VAT remittable must be remitted to FRS on or before the 21st day of the following month. It must be remitted to on or before the 21st day of the following month, which is the day of remitting the value added tax. So that is the period for the remittance of the value added tax. So that is what we know about one. Then also, as you are charging the value added tax, you must also keep accurate record of the value added tax of your information accurate record of the information must also be kept by the taxpayer. I told us that when your input VAT is more than your output VAT, you are expected to get what? A refund. The refund can be in various in three forms. It can either be what? By credit method. Credit method in the sense that, so let's say you have in January, we know that VAT is what is you VATable period is what is for a period of 1 month. So let's say in January you are supposed to get a refund. So that refund you can use it to claim what? To set off the VAT you are supposed to pay in what? In February. So for subsequent what? VAT payable. So that is what credit method. It can also be what? By a direct cash refund method. So you can also request for cash for what? From the relevant tax. An agent that is what? That is exempted from VAT. If you are an agent that is totally exempted from VAT, that means you are not going to be subject to VAT. So the only time you can get your refund is to request for cash from the relevant tax authority. But requesting for refund in form of cash by the relevant authority is not usually is not always easy. Then it can also be done through a combination of both credit method and cash method. So those are the three ways of requesting for refund by the taxpayer. And before this refund can be done, so you must what? It must have been established by the tax authority. That is, you must have provided relevant record whereby tax audit or tax investigation must have been done on the transaction to have been established by the taxpayer, by the relevant tax authority. Then, as you are an agent, the tax law also give the tax authority certain rights to carry out on your record. As I told you earlier, you must keep accurate record of the transaction relating to VAT. So as you are keeping the record, the tax law gave the tax authority certain power to carry out on your transaction. One of the power given to them is to carry out what is called a VAT visit. So the tax authority, they have a right to come to your premises, to visit your premises without notifying you. They can visit your premises to check your level of compliance, to ensure that you are complying with the VAT law, to ensure that amount you are deducting is what you are supposed to deduct. They can decide to come to your company uninvited. They'll just come. That is called a VAT visit. They'll visit your company to come and look at your level of compliance, whether you are applying the normal rate or whether to also look at whether you are keeping adequate record of the transaction related to VAT. So that process is called a VAT visit. So this is one of the reasons why they expect you to register with any FRA that is closer to your place of business. The tax authority also give FRA the right to carry out what's called VAT drive. So this is also done on a periodical basis by the zonal headquarters. So each of the VAT office, they have the regional headquarters. So the regional headquarters, they also have a right to do what is called VAT drive. So when they find out that you have been remitting VAT before, they now find out that from their record, you are not you have stopped the payment of VAT without giving them any notice. They can carry out what is called a VAT drive by visiting your office. They will visit your office to know the reason why you are defaulting in the payment of VAT. What is the reason for not paying for VAT? Then the tax law also gave the tax authority a right to carry out what is called VAT audit and investigation. VAT audit is different from investigation. The audit is an independent examination that is usually carried out at regular intervals. So audit is to check your record, to know whether what you deduct is what you are remitting. So that is what they do. They usually do under the VAT audit. So VAT audit is usually done to check your record, to know whether on a periodical basis. Then they can also do what is called VAT investigation. This is usually done, investigation is done when what? When they find out that what? When there is what? Element of fraud. When they suspect that what? The taxpayer is engaged in what? In fraudulent activity in relation to what? Value added tax. When they find out that what? You are engaged in what? Evasion of what? Value added tax amount. So when you are engaged in what? In fraud, they carry out what? A VAT investigation, which is usually what? An in-depth analysis. It's very robust. It's an in-depth analysis of your record. It's usually done. It's involved what? An in-depth analysis of your record, unlike what? Unlike the VAT audit, which is usually what? Done on a regular basis. This VAT money that is collected, as we know, it is collected by what? By the FRA, which is now shared by what? By the various arms of government. So the process of sharing it among the arms of government are the following: 15% to the federal government, 50% to state government and federal capital territory, and what? 35% to what? To the local government. So you can see that majority of the money is going to what? It's going to the grassroots. So why? Because most of this money are being generated from where? From the states. So that is why large portion is going to both the state government and the local government. Why only 15% is retained by the federal government. So after FRS have collected everything, it will now be shared. So in accordance to what? After removing their administrative charges, so they will now share it in accordance to what? To this ratio to each of the relevant tax authority. So any question? Any question? So we also have what is called what? The VAT, the value added tax, the VAT tribunal. When they carry out, I told you that they have a right to carry out what is called audit and investigation. When they carry out an audit or an investigation, they are going to come up with a liability. When they come up with this liability, you have a right to object to that liability. Any amount, they now tell you that, okay, based on our finding, based on our analysis, our audit or our investigation, we find out that you are owing this so amount. That amount is not what? Is not final. You have a right to object to appeal, to object and appeal to that amount. So the process of appealing to that amount on VAT, you are going to appeal to what is called VAT Appeal Tribunal. So there is a tribunal established by what? By the VAT Act, which is usually at various zones. Presently, we have what? 8 zonal tribunal. So we have 8 zonal tribunal established by the FRS Establishment Act at different locations, depending on what. So this between the taxpayer and what? And the tax authority relating to what? Dispute on what? On VAT. Between what? Between the taxpayer and the tax authority. Whereby what? The taxpayer, there is a dispute that tax authority is saying, okay, you are owing 10,000. But the taxpayer is saying, I'm owing only 2,000. And the tax authority does not want to, they don't want to amend that amount to 2,000. So you can decide to appeal to the VAT tribunal, which is like a court. This tribunal is like a court that taxpayer will. So they are going to what? You are going to appeal to what? So they sit like a court. This tribunal, they have what? They have justice. They have what? Tax appeal commissioner. So which are members of what? Members of the tribunal that look at what? Cases between what? Between the taxpayer and what? And the relevant tax authority, FRS. So they usually meet at various intervals to hear cases between what? Between the taxpayer and the tax authority. So if the decision made by this tribunal, if the taxpayer is also not satisfied with any decision made by the VAT tribunal, you also have a right to appeal further to the court to the High Court. So you have a right to also appeal further to the High Court. So after appealing to the High Court, after the decision, if you're also not satisfied with the decision of the High Court, you go to the Court of Appeal. So if you're also not satisfied with the decision of the Court of Appeal, you also proceed further to the Supreme Court, which is what? Which is the apex court. And any decision made by what? By the Supreme Court is what? Is final and what? And conclusive on what? On the taxpayer. So this VAT tribunal is just to what? To settle what? To look at what? Matter of dispute between what? Between the taxpayer and what? And the tax authority in relation to what? To value-added tax. Then we also have what is called the VAT Value-Added Tax Technical Committee. There are certain committee that is established by the VAT Act, known as what? The Value-Added Tax Technical Committee, which have various members. So what this particular aspect is also what ICAN friend. ICAN usually ask questions on this particular aspect by asking you to what? To mention what the composition of the committee and what function of the committee. So the committee are made up of the following. Usually, every relevant tax authority have what? Their head, which is usually the chairman. So the executive chairman of what? Federal Inland Revenue Service is usually the chairman of what? The VAT Technical Committee. Then all the director in the FRS are also members of what? The VAT Technical Committee. A director in the Nigeria Customs Service. Because what? So part of what? Custom is also part of the people that collect VAT. So when an item is being imported, so the director from Nigeria Customs Service is also part of what? The VAT Technical Committee. 3 representatives of the state government, which shall be members of what? Of the Joint Task Board. The legal advisor to the Federal Inland Revenue Service. So these 5 members, so 5 in column are what? Members of what? Of the Technical Committee. You may be asked for what? For the fund. So what are now the function of this Technical Committee? They consider all tax matters that require professional and technical expertise and make recommendations to the board. So they make recommendation to what? To the FRA on what matter requiring special professional and technical expertise. So they advise the board on its duty as specified in the Act. They advise FRS on their duty. So these are your duty. These are what you are supposed to do. And so they advise them on their duty. So they attend to some other matter that may be referred to it from time to time by FRS. So they organize meeting of what technical importance on VAT matter with FRS as far as what the VAT Act is concerned. So those are the function of the technical committee. As I said, this is ICAN friend. You may be asked for members of the technical committee and their function. So we also have, when you contravene any rule relating to the VAT Act, so there are offenses and penalty. So some of the offenses, failure to register for VAT is an offense in which so upon commencement, after 6 months of commencement of business, it's an offense. So the penalties were 50,000 for the first month in which the failure occur, and 25,000 naira for each subsequent month in which the failure continue. After 6 months, you are going to be liable to 50,000 in the first month after the 6 months. Then 25,000 for each subsequent month in which the failure continue. Then you also have some other offenses that are also very, very important. Non-remittance. When you have deducted, you now fail to remit. You are going to be liable to penalty of 10% of the unpaid tax plus interest as well, prevailing CBN monetary policy rate. I told you earlier that so when you cease operation, you are also expected to notify FRS of within 90 days of cessation of business. Failure to notify them that you have ceased your operation is also an offense. That is liable to penalty of 50,000 for the first month, during the failure occur, and 25,000 for subsequent month when the failure continue. So those are some of the penalty and offenses that are available under the word. Then failure to maintain proper record or keep accurate record accounts. So failure to keep record of your record relating to VAT is also an offense. You are going to be liable to a penalty of 2,000 for every month in which the failure continues. 2,000 for every month because for failing to keep record of account. Then failure to collect the VAT, or you are supposed to be an agent to charge VAT. You now refuse to charge it. Is also an offense. That is punishable by the tax law. So those are the various offenses and penalty that are available under the VAT Act. Then we also have the advantages of of the VAT, which is a source of what government revenue. It's a tax, it's a consumption tax, which is what easy to collect. So those are some of the advantages. It's a what it can be used as a tool of what fiscal policy to reduce what the consumption of what, or to reduce what the expenditure of what of certain what of members of the public. So when the cost is high, it will affect you from what? It will discourage you from where? From buying more of what? Of those items. As you have advantage, we also have disadvantages. High cost of keeping record by company agent. Because by law, you must keep record of your what relating to VAT. So to keep record is not what? Is not easy. So the cost of keeping record is what? Is very, very high. So it's a burden to some of the company. So injustice in the distribution of what proceed, you can see. So some of the states state that is bringing high. So you are now sharing the same percentage to all of them, which is what a major problem of VAT. Corruption on the part of tax official can render VAT ineffective because the person that want to pay may look at it that okay, the money if I even pay, they are even going to embezzle it. This tax official, they will embezzle it. So that may discourage somebody from paying your value-added tax. So problem of inadequate information can make VAT administration ineffective. So there is no much information about VAT. So as far as this is concerned. So those are some of the disadvantages of value-added tax. So those are the requirements we are supposed to know as far as value-added tax is concerned. Any question?
No, sir.
So any question? So we are now going to go to okay. I'm listening. Any question? So we are going to go to the computation part now. So under the computation, we are going to start with the first question number 1. The following transaction took place during the month of June 2000. We have AB Limited supply raw material to OB Limited for 500,000. OB Limited used the raw material to produce goods and sold them to SY Limited, a wholesaler, for 700,000. SY Limited in turn sold the goods to a retailer, JT, for 800,000. JT Limited sold the goods to final consumer for 850,000. Require compute the amount of VAT payable to FRA. As we know that VAT is charged at various stages of from the manufacturer to the final consumer, and the final burden, the burden of the entire amount will now be shifted to the final consumer. So at each of these stages of production and distribution, value-added tax must be accounted for at various stages of production and distribution. So there are 2 ways of calculating the value-added tax here, so which I'm going to show us now. The value-added tax, as I said. So let me go back to the question. So we have the following transaction took place during the month of. So calculate the value-added tax rate. Computation of VAT payable to FRA. AB Limited supply raw material to OB Limited for 500,000. So that means AB Limited is going to charge OB Limited 500 VAT on what? On that item. And when you are selling, give rise to which type of VAT? Who can tell us? Yes, we give rise to which type of VAT? Oh yeah, now says we give rise to which type of VAT?
Invoice.
We give rise to which? We have 2 types of VAT. Which and which?
Input
Types
and
of VAT.
output.
Input and
and output. Says we give rise to which one?
output
Says
VAT.
we give rise
Output.
to which one? Output VAT.
Output VAT.
Output.
Output VAT. So we have our output VAT. Output VAT. So when they are selling, when AB Limited is selling to OB 500,000, AB Limited is selling to OB 500,000. 500,000. So that will be 500,000. Multiply. In this question, we are not told whether that item is of VAT inclusive or exclusive. And I told you where the examiner is silent. What do you assume? Who can remind us? Where the examiner did not tell us whether it is inclusive or exclusive, what do we assume?
We assume exclusive.
Yeah, we assume
Exclusive.
exclusive. So we assume VAT exclusive. So that means what? 500,000 multiplied by what? 7.5%. Multiplied by the rate. We give us what? The value of the VAT, which is what? 37,000, which is 37,500. So this same amount now is an output VAT to AB Limited. This same amount, we now have input VAT. The person that's buying this item from AB Limited, who is buying the item? OB Limited. That amount will now be what? Input VAT to OB Limited, because OB is purchasing the item. So OB Limited now we now have input VAT of what? 37,500 naira. This same amount, AB is selling the item to OB Limited. That means AB is going to collect the VAT, while OB is going to what? Suffer the VAT. So to AB is what? Output VAT, while to OB is what? Input VAT. Because it's what? The same transaction. On the same transaction also, they now say OB Limited uses the raw material to produce goods and sold them to SY Limited, a wholesaler, for 700,000. So OB is now selling it to what?
XYZ.
For 700,000. So OB Limited now, OB Limited, we also collect output VAT on what? On the sales amount of what? How much?
700,000.
700,000 naira. On 700,000, that will be 700,000 multiplied by 7.5%. So that will give us how much? 700 times 52,500. 52,500. This same amount will become input VAT to what? SY, the person buying. SY Limited. 52,500 will become to input to SY Limited. Then after that, SY Limited in turn sold the item to a retailer, JT Limited, 800,000 naira. SY is now selling to JT Limited for 800,000 naira. So SY Limited is going to collect output VAT. SY Limited is going to collect output VAT on what? How much? 800,000. 800,000 multiplied by 7.5%. So that will give us how much?
60,000.
How much? 60,000. So that will give us 60,000. So this same amount to the person buying will become input VAT. To JT Limited, to become input VAT. JT Limited. Sorry, input VAT. JT Limited. Input VAT will be what? 60,000 naira. Then after that, we now have what? So the final. So this person, they now say JT Limited. So the goods to a final consumer for 850,000. Final consumer cannot shift it to anywhere. JT Limited is going to charge VAT, output VAT on the 850,000. We now have what? Output VAT. JT Limited on the what?
You're
850,000.
not seeing your sheet.
Okay. Sorry. On the 50,000 times 7.5%. So that will give us how much?
53,750.
63,750. 63,750. So this thing is sold to the final consumer. The final consumer will consume it. It's not shifting it to anybody. So we now add up all this. We have a total VAT, total output VAT, total output VAT. As I told you now, we are going to use invoice credit method. So that is, so you calculate your total output VAT, which will be this. You now minus your what? Your total input VAT. You also calculate this as your total input. So this will give us your total input VAT. So you now less your input VAT from minus 150,000. So the resulting figure, this will now be this. minus this. So the resulting figure will now give you what? The value added tax, which is what? Which is the value added tax. So that is what? How to what? Calculate your value added tax. So when you have what? So at what various stages of what? From distribution. So which is what we have here. That is it. And as I said, we have a two way of calculating this. Instead of going through this way, you can also do it this way. You can also put it in a tabular form. How do you put it in a tabular form? That's the same thing you did. We have a devatable person, we have the selling price, then we have a VAT collected, output VAT, and input VAT. The same AB limited, which we have here, AB limited, the 500,000. AB limited is only going to work. Charge what? Output VAT. 37,500 is going to charge. AB Limited did not suffer any VAT on this item. AB Limited did not suffer any VAT on this item. So the VAT paid will be what? 37,500. Then to OB Limited is going to suffer 52, is going to what? Suffer 52,500 VAT. But this same amount give rise to what? VAT of what? 37, input VAT of 37,500. When you minus 52,500 from 37,500, that will give you 15,000 naira as well VAT payable. This same SY Limited, this same SY Limited is going to sell this item and collect VAT 60,000. After collecting the VAT, it's also going to suffer VAT of 52,500. The difference will now be 60,000 minus 52. That will give us 7,500. This same Jet Limited is going to suffer, collect VAT of 63,750 from the customer, and it will suffer what? 60,000. The difference between 63,750 minus 60,000 will give us 3,750. So when you now add up all this VAT paid, the addition of everything will give us 63,750, which will give us the same answer. Either way can be adopted as your what? As your computation when you are asked for what? For this kind of a question, as what? As various stages of what? Of distribution from where? From the manufacturer what? To the final consumer. You can do either way, any of the way. You can do any of the way. Any of the way can be adopted by the manufacturer. So that is how to compose value added tax as well, various stages of distribution. Then we also have the second question, which is this one related to what? Computation of value added tax in relation to what? To the three method. So as I told you, we have a three method. We have invoice credit method, we have the subtraction method and the addition method. But where you are not told to adopt any method, the method that we adopt here in Nigeria is what? Is the invoice credit method, which must be adopted, except where the examiner specifically what? States otherwise. Then we have what? Question number 2. Samuel Peter Nigeria Limited during the year 30th September 2010 presented the following accounting information. We have the turnover, we have the purchases of finished goods for resale, we have rent, interest, maintenance of motor van, salaries, profits. So those are all the people. Then require calculate the VAT payable under the three different methods. Calculate the VAT payable under the three different methods. I'm going to analyze that here. So how do we calculate the VAT payable under the three different methods? We have the name of the taxpayer, Samuel Peter Nigeria Limited. Then we have what? The first method is what? Invoice credit method. Invoice credit method. Under the invoice credit method, I told you you have what? You calculate your output VAT and your input VAT and get the difference to get what? The VAT payable. Output VAT, we are what? VAT on your what? On your sales, on your turnover. The sales is our turnover. While the input VAT are what? VAT on what? On purchases. And I told you that what? The purchases, the expenditure that will form part of your input VAT are only what? Only which expenditure? Who can remind us? Only which expenditure will form part of our input VAT?
Direct revenue.
Yeah, direct revenue expenditure. So let us now analyze it here. So we have what? Turnover. This turnover now, under the invoice credit method, this turnover will give rise to what? Which type of VAT? Turnover is our sales. It will give rise to which type? Yeah?
Output.
Output VAT. So
Output.
that's what. So you calculate your output VAT. You can see it here. Output VAT will be the value of the turnover, 86,770, multiplied by 7.5%. Because in this question, we are also not told whether it is VAT inclusive or exclusive. In that case, we assume exclusive. And when we assume exclusive, it will be 7.5 divided by 100, which is 7.5%. So output value will be 86,770 times 7.5%. That will give us this value of 650,750. The output value, the next thing, you also calculate your input value. Input value, we have a purchase of a finished goods for resale. This finished good is what they are going to sell, according to the information given to us. So that means this is what? They are direct what? Direct revenue expenditure. So this will give rise to input VAT, 53,920 multiplied by 7.5, which is 400. Then we also have another expenditure that they incur, rents. So to this business now, this rent is going to be which type of expenditure? Who can tell us? Rent. Rent is which type of
Input.
expenditure?
Input.
Yeah?
Input. No.
Input care.
Expenditure.
Is expenditure input? Rent is going to be which type of
No.
expenditure? Is two form now. I explained it earlier. Either revenue or capital. And revenue can
Revenue.
either be what? Direct or indirect. Rent is which type of expenditure? Is it
Indirect.
revenue expenditure or capital expenditure?
Indirect.
Indirect
Is revenue.
Capital.
Indirect is revenue. Indirect revenue expenditure. So it's not going to form part of what? Part of our input VAT. Then we also have interest. Interest is which type of expenditure? Oh yeah, now. Interest. Interest, maybe you borrow money from the bank, or the interest you are paying the owners of the business. Interest you are paying owners of the business.
Indirect
Is what?
revenue.
Is indirect now. It's indirect. Then we have a maintenance of motor vehicle. Maintenance of motor vehicle is which type of expenditure?
Indirect.
Indirect. It's also not going to form part of what? It's also not going to form part of our input VAT. Then we have salaries. Salaries, which type of expenditure?
Indirect.
Indirect. Thank you. Then we have a profit. Profit is not subject to VAT. So the only item that will form our input VAT for the purpose of computation of value-added tax is what? Is this or purchase of finished good for resale. You can see, I told you earlier, you can have a lot of information. The information that will be relevant there may not be more than 2, 3, or 4. So you can see out of all this information given to us now, we only need 2 out of it to calculate our value-added tax. So our value-added tax payable will now be what? The difference between the input VAT, which is what? 400,000 minus what? 607,750 will give us what? The value-added tax. Mishak, what's your question?
Yes. Good afternoon, sir.
Afternoon.
Regarding the salary as indirect expenditure, that's indirect revenue.
Yes.
What if in a situation where they pay labor? So would that still be indirect?
I said it that look at it. What will make you to say whether an expenditure is direct or indirect to a company is what? Expenditure that they are going to sell. Expenditure that is going to generate you your revenue. That expenditure is the expenditure that you are going to use to work to generate your revenue. Are they going to sell their worker to get their revenue? No. Their worker is going to provide services to them. Whether it is what wages or it is still what indirect. The expenditure that is going to form your direct revenue expenditure are expenditure that what that is going you are going to convert to your sales. Do you get that?
Yes, sir.
Expenditure that you are going to convert to your revenue. That is, those are the things that you are going to sell. That's going to give you your what? Your revenue. Like in the case of what? This finished goods. This finished goods is what they are going to sell to customer. That is going to give them what? Yeah, turnover. But in the case of whether wages or salary, you are not going to sell your employee. Your employee will only provide what services to you. Whether you have wages or you have salary, it is still what indirect what revenue expenditure. Is it clear?
Yes,
Any
sir.
other question? So the difference between our output VAT and our input VAT will now give us a VAT payable. So that is what? For what? For invoice credit method. Apart from this question, so we should use what? The three method. Apart from invoice credit method, we have what? Subtraction method. Under the subtraction method, I told you that what? This involves the process of what? Calculating what the value, amount of what? Value added. You first of all calculate the amount of value added. You now apply your what? Your tax rate. The value added tax rate on what? On the value added to get what? The value added tax. Under this one, you are going to calculate the value added. To get your value added, you subtract your purchases, your direct purchases from your sales. You are going to remove your direct purchases from your sales. So we know our sales, our turnover, the total sales will be what? 86,770. So you are going to remove our direct purchases, which is what? 53,920. When we remove our direct purchases from our sales, the resulting figure will give us a value added. So that will give us value added. So the value added, you now apply the VAT rate. The rate of VAT is what? 7.5%. You apply the VAT rate on what? On this amount of value added to now give you what? The value added tax. So amount of value added will give you what? 2463,750. I told you under normal circumstances, when you have the same question, the invoice credit method and subtraction method will give you the same answer. Please, but in the exam, don't go and use subtraction method. If the examiner did not specify that one, you should adopt it. So you can see we have the same answer as well what we have under the invoice credit method and what? And the subtraction method. Then the last method is what? Addition method. Under the addition method, this involves what? The process of what? Of adding what? All the factors, all the reward generated by what? By all the factors of production. The reward generated by all factors of production will be added. Then that will give you what? The value added tax, which will be up, in which you now apply what? The value added tax rate on that. So this is not adopted in Nigeria. Take note of that. So if we go back to the question, so what are the reward for all the factors? So the information given to us are, we are giving turnover, that is the sales of, we are giving purchases of finished goods, that is their direct purchase. Rent is the reward for which factors of production? Who can tell us? Rent is reward for which factors of production? Oh yeah, now. Which factors of production collect rent at their reward?
Land.
Or before the
Land
what
and
are
building.
the what are the
Land.
four factors of production? What are the four factors of production? Who can
Capital,
tell us the
land,
four factors?
labor, entrepreneur.
Land, labor.
Land, labor, capital, and entrepreneur.
Yes, land, labor, capital, and entrepreneur. So we are now giving rent. Which of the factors of production reward is rent?
Land.
Land. Yeah, so you take that land. The reward for that factors of production is what? Rent. So land. Then after land, we have interest. Which factors of production receive interest?
Capital.
Capital. So the reward for capital is interest. So you also take that. Then salaries. Which factors of production take salaries?
Labor.
Labor. So you
Labor.
also take that. So labor. Then we also have a maintenance of motor vehicle. Which factors of production is going to engage in that maintenance of motor vehicle? It is what? The entrepreneur. It
Entrepreneur.
is the owner of the business, the one-man business. The one-man business, they are the one that is what? That is going to do that process of what? That is going to engage in what? That activity of what? Maintenance. So that it is what? Reward for what? Entrepreneur. Then we also have a profit. Profit. Which factors of production get profit?
Entrepreneur.
Entrepreneur. So you add up all this reward together. The addition of all this reward together will give you what is called total value added. After getting the total value added, we now apply the VAT rate. We know that the rate of VAT in Nigeria is 7.5%. We now apply the rate 7.5% on that amount to get so 7.5 on this amount will now give us the value added tax. So value added tax. So please, as I told you, these two methods, subtraction and addition method, are not adopted in Nigeria. You only use it when the examiner specify that it should be adopted, and it's not going to give you the same answer. So most of these advanced countries, they also use the addition method. So those are the three methods and ways of calculating value added tax using the different method of computation. We also have another question, which is related to question 3. This question, I think it was last diet question. So last diet question number. Nigeria Limited is a manufacturing company which commenced business in 2011. The managing director of the company received a letter from Federal Inland Revenue Service intimating the management of his desire to carry out a VAT audit. The list of the tax authority a right to do what is called VAT visit, VAT drive, VAT audit, and VAT investigation. For this one now, they want to do VAT audit. The list of documents required for the audit were forwarded to the MD on August 30, 2025 with respect to this request that a preliminary meeting be fixed for September 2, 2025. The VAT inspector visited the company on October 15th to commence the audit, and during the fieldwork, all the accounting documents were made available to them. During the exit interview, the VAT inspector stated that there was an under-remittance of VAT. Based on the foregoing, 8 million was computed as VAT payable for the year under review. The managing director has approached you to recompute the VAT payable to ascertain the amount captured by VAT inspection. The following information were extracted from the books of the company for the year ended December 31, 2024. We have the information. Monthly VAT was remitted to FRA as at when due. There was no opening or closing inventory for each of the month. Gross revenue, VAT inclusive. Some of these are VAT inclusive. Purchase of raw material, VAT inclusive. Purchase of spare parts for office vehicle, VAT inclusive. Transport and traveling, VAT inclusive. Office equipment, VAT inclusive. Professional fee, VAT inclusive. Furniture and fitting, VAT inclusive. Bank charges, VAT inclusive. Sales return. The power plant repair, VAT inclusive. Miscellaneous expenses, VAT inclusive. Return of raw material purchase, return of raw material purchase, motor vehicle, repair, VAT inclusive, value of exempted zero-rated supply included in revenue. All are figures. You are appointed as the tax controller to advise the company on the proposed additional assessment and other tax matter required. Compute the VAT payable for the year ended 31 December 2024. Ignore penalty and interest. Then B, explain why some items in the list were treated differently. C, explain registration and the registration requirement for VAT. This question relates to what last diet question. So we are giving the question to compute what the following information relating to value added tax. So in our computation, as we all know, one thing is very important, which is what? The requirements is very, very important for any question relating to VAT. For any question on taxation, any computation on taxation, not even VAT, any computation, the requirement and the name of the taxpayer. So the non-stating this will lead to a loss of mark. If you fail to state this, you usually will lead to a loss of mark during the process of marking the question. So we have what? The name of the company, Gansi. So let me write the name of the company first before I go to the question. Gansi, Nigeria Limited. Then we have a computation of value added tax. Computation of VAT for, so which month are we giving for? Value added tax for the year ended 31 December 2024. For the year ended 31 December 2024. So as we all know, we are in Nigeria, we adopt what? The invoice credit method. So we have to calculate our output VAT. So in computing our output VAT, so let me now go to the question. So we need to compute our output VAT. So to compute our output VAT, we are giving all the information above our story. We have a gross revenue, VAT inclusive. Look at it, VAT inclusive. That is what? The revenue. That information will give rise to what? That revenue will give rise to which VAT? Who can remind us?
Output.
Output VAT. So we have what? Gross revenue. So all are in thousand. Then we have what? 220,000. From that information, I'm seeing one information again that the examiner is giving me. So let me go back to the question. The examiner is also telling us that sales return, you have sold those items. During the month, they now what? They now return those items. That means it's not going to form part of the item you are going to pay VAT on. I mentioned it earlier when I was explaining the computation of value added tax. That will not form part of your sale because it has been returned. You cannot be charged for the VAT on it. So you have to what? Remove the VAT on that what? On that item that is what? That is being returned. So return. So will be less from where? From our what? From our sales. So you are going to less that value. You now see less return 1.2. Then we have what? Less sales return. With value of zero rated supply included in revenue. I told you when an item is what? Is exempted. That means or zero rated. If an item is exempted, it's not going to be available for VAT. If an item is zero rated, what will be the rate of VAT? Who can remind us? If an item is zero rated, what will be the rate of
0%.
VAT? 0%. So that means, and
0%.
this amount has already been included in our sales. In that case, we are going to what? Include it from, so you also see less what? Zero rated or exempted item because you are told that it's already included in sales. Less exempted, stroke zero rated. So that is what? Minus 15,000. So the result figure will now give us the value 203. So the result figure will give us a value. So which is what? Net revenue. So net revenue. So this value will now be called what? Net revenue. So this value is what we are now going to apply our output. So our output VAT will now be, we are told in the question that what? The value is what? This value is what? That's what? Inclusive. Abi? We are told that it is what? VAT inclusive. And I told you that if an item is VAT inclusive, that means what? The VAT element is also what? Included in that amount. That instead of the amount to be 100%, it is 100 plus what? 7.5, which is what? 107.5. So that means to calculate the VAT, output VAT will now be what? 7.5 divided by what? 107.5 multiplied by 203. Multiplied by 203
800.
800. So we give us what? The value of the VAT, which is
VAT.
value of the output VAT, which will give us how much? 14218.60. 14218.60. So we give us what? The output VAT. After the output VAT, we also have input VAT. Input VAT. So expenditure will give rise to what? Input VAT. So let us now go to our question again. Input VAT. Input VAT. For the input VAT, we have what? Purchase of raw material. So this raw material is what they are going to convert to what? To an item that they are going to sell.
Finish.
So what category of expenditure is this?
Direct revenue.
Is it direct or indirect or capital expenditure? Purchase of raw material
Direct.
is what? Direct expenditure. So direct expenditure, purchase of raw material. So you come here, purchase of raw material. We have here purchase
So your sheets, you're not seeing.
of, okay, sorry. Purchase of raw material. I've shared it now.
Yeah, you're seeing it now.
Purchase of raw material. How much? Purchase of 108,200. 108,200,000. After that, let me go back to the question. After purchase of raw material, the next thing we have from the question is what? Purchase of spare part for office vehicle. Purchase of spare part for office vehicle. What category of expenditure is this?
It's indirect expenditure.
Indirect.
Expense.
Indirect. Which of indirect or revenue expenditure? So it's not going to form part of what? Part of our input VAT. We are not going to use it. Transport and traveling. Which type of expenditure is that? Oh yeah, now transport and traveling.
Indirect.
Indirect. It's also indirect. It's not. We don't have any business with it. It's going to form part of what? Item that will be taken to what? To profit or loss. Office equipment.
It's capital expenditure.
Office equipment
Capital expenditure.
Office
is
is
what?
capital.
Capital expenditure.
Expenditure.
Capital expenditure, that value will be what? Capitalized as part of the cost for what? For capital allowance claim. It's also not going to form part of what? Part of our what? Our input VAT. Professional
VAT.
fees.
Indirect.
Indirect. Furniture and fittings.
Capital
Capital
expenditure.
Capital
expenditure.
expenditure is also not going to form part of our expenditure. Bank charges
Indirect.
is indirect. It's also not going to form part of our input VAT. Sales return, we have used that. Power plant repairs.
Capital.
Capital expenditure.
Yeah. Capital
It's
expenditure.
capital.
Power plant repairs.
Okay,
No,
sorry,
no,
repairs.
indirect.
Repairs.
Indirect.
Indirect.
Indirect. It's indirect now. It's not going to form part of our what? Our input VAT. Miscellaneous expenses.
Indirect.
Indirect. Then we have what? Return of raw material
Return
purchase.
of.
There is a return. Return of the raw material purchase. There is a return. So you less it, less the return. How much? 100,000. You less it
600.
from your
600.
purchases. So return of the raw material purchase. We less it, less return, 600. Then after that, we have what? Motor vehicle repairs. What type of expenditure is that?
Indirect.
Motor vehicle
Indirect.
repairs is what? Indirect expenditure. It's also not going to form part of what? Part of our input VAT. You can see out of all the information given to us, we only make use of what? Only like 4 out of or 4 or 5 out of all the information given to us. So in that case, so you remove what? You remove this from here. So you remove this from to get your what? Net purchases. So this will give us net purchases. So from there, you can calculate your input VAT. Our input VAT will be what? We are told that that value is what? VAT inclusive. That purchase is also what? VAT inclusive. All those values are what? VAT inclusive. So purchases is VAT inclusive because it's divided, that will be what? 7.5 divided by 107.5 multiplied by 107,600. So that will give us the value for what? For the, which is what? 7506.98. 7506. 7506.98. So you minus it from here, minus 7506.98. You minus, so the difference between our input VAT and our output VAT, when your input VAT is more than your output VAT, what do we have? When our input VAT is more than our output VAT, what do we have? Oh yeah. Oh yeah, now when our input VAT is more than our output VAT, or when our output VAT is more than input VAT, what do output
VAT
is more than
payable.
input VAT. What do we have? VAT payable. So we have what? VAT payable. So what will happen if your input is more than output? What do we have? What do we
VAT
call it?
VAT
refund.
VAT was
VAT
refund.
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 Thank you, VAT refund. So VAT payable will now be different between what? Input VAT minus what? Minus the output VAT will give us what? The VAT payable. So the which is 6711.62. So which is what? How to calculate your VAT in relation to what? In relation to a scenario when you information that you are giving will be relevant during the process of what? Computation of what? Your value added. So that's the reason why what? You need to what? To know how to categorize your what? Expenses to what? Direct and what? Indirect, as also what? Capital expenditure. Then the B part says what? Explain why some items in the list were treated differently. So who can tell us what is the reason why some items were treated differently? What is the reason why some items were treated differently? Oh yeah, now. What is the reason why some items were treated differently? Hello, I'm listening. What is the reason why some items were treated differently? We mentioned it earlier now because what? Some of them are what? Direct what? Direct revenue expenditure. Some of them are what? Indirect revenue expenditure. Why some of them are what? Capital expenditure.
Capital.
And you give them the reason that any item that is
Okay.
capital, any expenditure that is capital expenditure will not form part of what? Our input VAT. It will be
Input.
what? It will be capitalized as
Capital
part of the
allowance.
cost of
Okay.
what? The asset for what?
That's it.
For capital allowance claim. Any expenditure that is what? Indirect revenue expenditure will not form part of our input VAT. It will be what? It will be added as part of what? Part of the cost of the expenditure that will be taken to what? To profit or loss for what?
Yes.
For as what? As allowable expenses. It is only what? The input VAT that is suffered on what? On direct revenue expenditure that will be deducted from our output VAT for the purpose of what? For the purpose of computation of what? Value added tax. So that's what examiner expects you to explain. So you just explain that and get your full mark. They also ask you explain registration and the registration requirement for VAT. So we know what? We know the registration for VAT. So you're expected to register within how many months? Who can remind us? You're expected to register within how many months? Within how many months?
6 months. 6
Within
months
6
after
months of what?
commencement.
Of commencement of what? Of trade. For the purpose of what? Value added tax. Then you also expected to what? To deregister with for value for the purpose of VAT after cessation within how many months?
3 months.
You're
3
expected to
months.
deregister within how many months?
Within 3
90
months.
days.
3
3
months, which is
months
what,
for
90
company.
days. Within 3 months, which is what, 90 days. So that is what the law says. So that is for what? For the process of what? Computation of what? Value added tax. So we also have another question number 5. So this was May 2024. So this question is having what? Inventory. So we also need to look at when there is what? Inventory. When inventory is involved, you may also be asked to what? To calculate value added tax. So we have Avila different kind of perfume, body lotion, and other cosmetic products. The statement of profit or loss of the company for the year ended September 30, 2021 is as follows. We have turnover, less cost of sales, gross profit, other income, less operating costs, interest and similar charges, profit before tax, taxation, profit after tax, dividend, retained profit for the year. All are figures. You are provided with the following additional information. Turnover is made up of 64,350 export and 141,90 local sales. Cost of sales comprises opening inventory, VAT inclusive, closing inventory, VAT inclusive. Purchase of raw material, freight charges, other direct material, VAT inclusive. The company purchased plant and machinery which cost 24,750. This amount was included in opening inventory, VAT inclusive. This amount was included in opening inventory, VAT inclusive. Value-added tax and withholding tax remitted during the year amounted to 217,380 and 1,787,500 respectively. You are required to compute the net VAT payable by Avila Manufacturing Limited for the year. We have to compute the net VAT payable. As we all know, VAT is payable, so we have the name of the taxpayer, Avila Manufacturing Limited. Then we have a computation of VAT for the year ended 30th December 2021. So to compute the VAT, we use invoice credit method. We have our output VAT. We less it from our input VAT from that. Output VAT are what? VAT on what? On sales. This is now turnover output VAT. But from the question we are told, from the notes, we are told an information. The examiner told us from here that, look at it. They said turnover is made up of 64,350 export sales and what? 141,900 local sales. Which of these sales will be liable to VAT? Who can remind us? Which of these sales will be liable to VAT? Or is it the total sales? Which of the sales will be liable to VAT?
Local sales.
Local sales.
Local
What about
sales.
what will happen to the export sales?
Both the local and the export.
Is VAT exclusive?
The
VAT
export
exclusive.
sales.
Okay. Somebody said both the local and export. Why? So it is only the local sales that we are going to charge VAT on. Why? Because don't forget, in our last, I told you, which principle do we adopt in Nigeria? Who can remind us? Which
Invoice
principle do we
credit.
adopt? No, principle. Which principle of VAT do we adopt in Nigeria? We have two principles that is applicable to VAT. We
The
have what?
origin principle.
Origin principle and what? Destination principle. Which principle do we adopt in Nigeria?
The origin principle.
The which principle we
The
adopt to
destination.
destination
Okay,
principle?
destination principle.
Destination principle is adopted
Destination
in
principle.
Nigeria. So that means if you are exporting an item, that means that item is not going to be consumed in Nigeria. So that item will not be subject to value added tax because you are exporting the item. It's not going to be subject to value added tax because of exportation process. So it's not going to be subject to value added tax. So only the what? The local sales will be what? Will be applicable to what? To value added tax. And we are told it is what? So in the question, we are not told whether it is what? Inclusive or exclusive. We assume what? VAT exclusive. So the only the
Exclusive.
local sales. So local sales of 141,900. So local sales of 141,900. You can see local sales 141,900. So only the local sales of 141. So output VAT 141,900 multiplied by 7.5%. Only the local sales 10,642,500. Then you now say let's input VAT. Because we have inventory, we are giving inventory here. So you are going to when you have inventory, you do what? You add your opening inventory to your purchases and what? Less the closing inventory. Opening inventory is what? We are told opening inventory, VAT, you are going to look at the opening inventory, 24,915,000. Then in the question, we are told that the company purchased plants and machinery which cost 24,750. This amount was included in opening inventory. Plant and machinery is which category of expenditure?
Capital expenditure.
It's for capital expenditure. Does it form part of our input VAT?
No.
No, sir.
No. Because it is capital expenditure, you must eliminate this amount, 24,750 from where? Opening inventory.
Opening inventory.
So opening inventory will now be 24,915 minus the plant and machinery 24,750 multiplied by, because this value, you know, we want to get the value. This value is what? VAT inclusive. According to the information given to us, VAT inclusive, which means this value is at what? 107.5. But we want to get what? The 100%. In order to what? To calculate our value added tax. Why do we need to get the 100%? The reason why we want to convert it to 100% is because look at the purchases given to us. Purchases of raw material. We are not told that the purchases is what? VAT inclusive. That means the purchases is what? VAT exclusive. So that means any adjustment you are going to do on the purchases must also be at the same level. That means this opening inventory must also be converted to what? Exclusive. How do we convert it to exclusive? By making it to be what? 100%. That means it will now be 100 multiplied by 100 divided by what? This value is at 107.5 divided by 107.5. We give us what? We give us the what? This value of 153,488. Then we now add what? You take the purchases of raw material 94,600. We take the purchases. We have what? We have freight charges. Freight charges is also what? Direct what? A direct cost. We also take that 2570. We also have other direct material, VAT inclusive. Because that is VAT inclusive, we also convert it to what? To exclusive, which is what? 114,544 multiplied by 100 divided by what? 107.5. All this will be added together to get our what? Our total purchases, which will be what? Which will give us 128,853,488. Then you are going to less your what? Your closing inventory. From the question, we are told that closing inventory is what? 40,865. We are not told that anything is included in the closing inventory. So closing inventory, you let your what? Closing inventory 40,865,000. You convert it to what? To exclusive, which is what? 100 divided by 107.5. So closing inventory, that will give us what? 38. So this will give us a total cost of goods sold at what? At exclusive. This value is not what? At VAT exclusive. So we are also giving some other expenditure from the question. Let me go back to the question. We are giving what? Other income. It is not subject to what? So we are not told of the nature of the other income. So we cannot charge VAT on it. We also have operating expenses, which is what? So operating expenses. So this will give, you are not giving the breakdown. It will be assumed that what? That will give rise to what? To which expenditure? Indirect what? Indirect revenue expenditure. We also have interest and similar charges. Interest and similar charges. What kind of expenditure is that?
Indirect.
Interest and similar. Indirect. It's also indirect. It will not be subject to value added tax. Then we have what? We have profit. Profit is not subject to VAT. We have a dividend. Dividend is not what? Is not subject to what? To value added tax. That is also what? Distribution to what? Profit that is distributed to what? To owners of business. What is subject to is what? Is withholding tax. So it's a profit. It's not subject to. That means it's only what the cost of goods sold that will be, that is subject to what? To value added. So we now calculate our total. So total input VAT will now be what? 7.5% of what? Of this value. 7.5% of this value will give us what? Will give us the total what? Total input VAT, which is what? 6812965. So when you now look at the difference between your input VAT and your output VAT, that will give us a VAT payable. From the question, we are told here that what? Value added tax and withholding tax remitted during the amounted to this. We are only concerned about a value added tax in this question. You minus what has been remitted, which is what 2173180, 2173180 from what? From what they are supposed to pay. The amount will now give us a net VAT payable. Because they have paid certain amount earlier, the balance will be what will be payable to the relevant tax authority. So that is how to calculate value added tax when inventory is involved. You may have a scenario whereby inventory may be added to as part of the scenario to calculate value added tax. Then we also have question number 6. I told us when we did withholding tax that I'm also going to use this question. That's why I want to do it. I'm also going to use this question to calculate for value added tax when we get to value added tax. This question we also treated this question when we did withholding tax, where we calculated the withholding tax related to this question. This question we also asked to do to compute value added tax there. We have Global Agent Logistics. It's a company that render logistics service to financial in Nigeria and worldwide. An extract of the statement of profit or loss for the year ended December 1 is as follows. We have contract of supply, recruitment fees, interest received, expenditure payment to supplier, management fee paid to Koshemani Consult, audit fee, administrative expenses, legal and professional fee. We have the profit. Then note, the total withholding tax credit note available to the company amounted to this. Required. The question asks, compute the VAT payable to the relevant tax authority. Compute the withholding tax payable to the relevant. We have already computed the withholding tax as at when due. To compute the VAT, we need the name of the company. Very important. Global Legend Logistics. You must put the name of the company. The requirement computation of VAT payable for the relevant year of assessment. Then we now have our output VAT. The income will give rise to the output VAT. Under the income, we have a contract of supply. So this company is rendering logistics services. This is their major services they are rendering. So it's going to be liable to value added tax. So we are not told that it is VAT inclusive or exclusive. We assume exclusive. Contracts of supply, 668,250. So we give rise to output VAT 250 times 7.5%. That will give rise to output VAT. After that, we have what? We have the next one. We have a recruitment fee. It's also an income. That is what? That is subject to a value added tax. It's also an income to the company, which they will also add VAT. So it's also an added value. 318,750 will also be subject to VAT. Recruitment fee. 318,750 will be subject to VAT. We have what? The next one we have interest received. Interest received is not what? Is not subject to VAT. So I want to point out something here. When we did exempted goods and services, part of the item that are exempted is what? Is interest. Part of the item that we talk about that are exempted or that are zero rated are what? That are exempted, yeah. Part of the services that are exempted. Interest for what? Bank deposit. Any form of interest is what? Is not liable to what? To value added tax. What will be liable to is what? Withholding tax. So because what? So interest is as a result of what? You putting down the money that they generate what? The interest. So it's not liable to, is what? Exempted. There are services that is exempted from where? From withholding tax. So in that case, so that amount interest, that income will not be what? Will not be subject to what? To value added tax. So that's why we do not include it as part of the computation because it's not subject to value added. So those are the only two income that will be liable to a value added tax, which will give rise to output VAT. Then our expenditure will give rise to input VAT. Under the input VAT, we have a payment to supplier. Your supplier, payment to suppliers, your supplier are your what? Are your direct supplier. So they are the one that what? That you are going to what? They are the ones supplying you the item that what you are going to supply to your what? To your customer. So in that case, so that will give rise to what? To input VAT, payment to supplier. We are not told that it is exclusive. 7.5 multiplied by what? The value will give us what? That value. We now have management fee paid to Koshe Money Consult. What type of expenditure is this? Who can tell us? Management fee. What type of expenditure is that? Management fee.
Indirect.
Paid to indirect. It is indirect. So it's not going to form part of what? Part of our input VAT. Then audit fees. What type of expenditure is that?
Still
Oh, yeah.
indirect.
It's also what? Indirect. Administrative
Indirect.
expenses.
Indirect.
Indirect.
Again.
Legal and professional fee.
Indirect.
So the only direct revenue expenditure we
Payment
have
to
here is what?
supplier.
Payment to supplier.
Payment to
So
supplier.
payment to supplier. So we apply what? The 5% to get what? Our input VAT. So we remove it from where? From the output VAT to get what? VAT payable. So you can see that for a question relating to VAT, it's not all the information given to you by the examiner that will be relevant. So most of the information that will be provided by the examiner are what? Are irrelevant information. But you need to be able to what? To analyze the information to be able to know whether what? The information will be relevant or irrelevant during the process of what? Computation of what? Of the value added task. Any question? Any question?
No, sir.
So in the absence of no questions, this is where we are going to stop the class for today. So we are going to continue the class in our
So can we get
subsequent.
the Excel template, the one
Yeah,
you
I will
worked
send
on
it.
Excel?
I will send it. Don't worry. I will send it to the
Alright.
group as soon as we finish the class. So take care. Have a lovely day ahead.
Thank you, sir.
Thank you, sir.